Hello class, good day. So this is the first video that we'll be having this entire semester for financial management, and this video talks about an introduction to financial management, specifically the first topic that we will be having. So first we'll go to an overview of financial management. So first and foremost, let me ask you, what is finance? So finance is very hard to define. It's because it has so many facets, and it would be difficult for us to make a clear and a concise definition for this one. So in order to help us to understand what is finance, let us go over into finance versus economics and accounting. It's because, first and foremost, finance stemmed out from both economics and accounting, because economics and accounting existed even before. So the economists actually developed the notion that an asset's value is based on the future cash flows the asset will provide, and accountants provided information regarding the likely size of those cash flows. And so then finance then grew out of and lies between economics and accounting. So people who work in finance need knowledge of those two fields. So in this context, in this chapter, we will be able to understand modern corporation, and that the accounting and how the accounting department falls under the control of the chief financial officer. So with that said, let us go into finance within an organization. So this is a picture of finance within an organization. This is just a general chart of how it looks like. So an organization is headed by the board of directors, and usually the board of directors is headed by the chairman of the board of directors, and part of the board of directors is the chief executive officer, or we refer to here commonly as the president. And the president in this specific illustration has two people under him. So it's the chief operating officer and the chief finance officer. Sometimes under the president or the CEO, there are also three main divisions. It may be sales, finance, and operation, which has different vice presidents handling or taking over it. So for these purposes, we will only be talking about two. So the chief operating officer usually is in charge of the marketing, production, human resources, and other operating departments, while the chief finance officer handles the accounting, treasury, credit, legal, capital budgeting, and investor relations. So to make it in an easier context, the chief financial officer is the one who looks into the monetary transformation of what operation does. Okay, so let's proceed. So how about the corporate finance, capital markets, and investments? So financial management is actually referred to as corporate finance because it focuses on decisions relating to how much and what types of assets are to be acquired, how the company will be able to raise the capital needed to buy those assets, and how to run the firm so as to maximize its value. And so the same principles will apply to both for-profit and not-for-profit organizations. And as its title suggests, um, this subject will focus more concerned with the financial management. Okay, so how about capital markets? So capital markets, it usually relates to the market where interest rates along with stock and bond prices are determined, and also studied here in the financial institutions that supply capital to businesses. So this refers to commonly as banks, investment banks, stockbrokers, mutual funds, insurance companies, and the like. They will bring together the savers who have the money to invest in businesses. So, a capital market is usually the core foundation of an economy, so they are very, very important. Lastly, investments relate to decisions concerning stocks and bonds and include a number of activities such as security analysis, portfolio theory, market analysis. The so-called behavioral finance is where investor psychology is examined in an effort to determine if stock prices have been bid up to unreasonable heights in a speculative bubble or driven down to unreasonable lows in a fit of irrational pessimism. It is actually a part of market analysis. Later on in this subject and when you go out in the real world and have a job under the finance sector or the capital market sector, you will be able to understand more of this more thoroughly. Okay, so now let's proceed with the jobs in finance. So if you are able to track the demands in abroad or even locally, of course, healthcare jobs is growing faster, given also that it's pandemic. But aside from that, it is jobs in finance that have been growing faster because whether or not it's profit or non-profit, those type of institutions needs people who are well versed in finance to assist them. So therefore, this subject will help you prepare for jobs in banking, investments, insurance, corporations, and the government. And for you accounting students, why is there a need for you to know finance? It's because finance is a basic or the common thing that you also need to understand the three other basic knowledge that you should have, such as marketing, management, and human resources. It's because marketing people would propose advertisement programs, but of course, those programs would be examined by you and judge the effects of those advertising, whether or not that would contribute to the firm's profitability. And in order for marketing to be effective, it should have a basic knowledge of finance so that upon its proposal, you would be able to already infuse that knowledge in finance in making your creative marketing strategies or ideas. And that is also true with management because the most important management decisions are evaluated in terms of their effects on the firm's value. So technically what is going on in top management, what is important to them is not the narrative report, it's more on the absolute value amount that each and every department yields or each and every report presents. So it is so finance is very, very important. Again, it does not mean that a an organization is non-profit, that finance should be neglected. It is still important to non-profit orgs to have finance people, because there are monetary transactions that transpires within that organization. But what the main difference only is that profit is not the driving force of that organization. Okay? So now let's proceed with the forms of business organization. So the typical forms of business organization is composed of sole proprietorship, partnership, and corporation. So before proceeding to this subject, as accounting majors, I believe that you have already undergone partnership and corporation as an accounting subject. And furthermore, partnership and corporation is actually also has a law subject. So I will not be discussing this further, but I will give you an assignment in regard to this one. So you are to submit to me a summary of the key differences in the forms of business organization. You're going to use a table to present the comparison of the significant features of each, and you will write it in a piece of paper and upload it in the submission bin in our Google Class. Okay, so I'll be posting a separate announcement for that, and that is due on January 29, 11:59 p.m. Okay, so I'll be waiting for your answers, and I really expect that you will be able to provide to me. I am only asking you of 3 key differences. There are other key differences. It's more than 3, so this is easy for you. Okay, so this should be handwritten, written. So next, let's proceed with the intrinsic values, stock prices, and executive compensation. So first, let's go into the definition. So intrinsic value, this means an estimate of a stockholder's true value based on accurate risk and return data. The intrinsic value can be estimated but not measured precisely. Market price is the stock value based on perceived but possibly incorrect information as seen by the marginal investor. So marginal investor is also defined as an investor whose views determine the actual stock price, and equilibrium is the situation in which the actual market price equals to the intrinsic value. So investors are indifferent between buying or selling a stock. So in this case, as shown in the figure below, this is the determinants of of intrinsic values and stock prices. So the main factor for this one is managerial actions, the economic environment, taxes, and the political climate. So if it involves true investor returns, it is perceived as the stock's intrinsic value. If it's true risk, it is still under stock's intrinsic value. But the keyword for stock's market price is perceived. So when you look at perceived investment returns and perceived risk, we refer to that as the stock's market price. So whenever the stock's intrinsic value and the stock's market price are equal in amount, so that's where we get our market equilibrium. So at this point, the buyers of stocks will really have the apprehension of buying or selling the stocks that they have. Okay, So take note of the keywords for the stock market price. It's perceived, and for the stock's intrinsic value, it is referred to the true value of the stock. Okay, so now we go on to the business ethics. So business ethics is actually a company's attitude and conduct towards its employees, customers, community, and stockholders. So, okay, what are companies doing right now for to ensure that business ethics is practiced? So most firms or companies have written codes of ethical behavior found in their employees manual, or they conduct training programs to ensure that the employees would understand what is a proper behavior in different types of situations, how to handle conflicts, especially when it involves profits and ethics and things like that. And there are also people who look into these types of things, whether or not this or not are violated. So what would be the consequences of unethical behavior? Over time, in many financial cases presented, that of what we're going to talk about in the next few months under this subject, most of the time when unethical behavior is present in a corporation or company and there are lapses in detecting this ones, this would actually lead to bankruptcies. So actually that is what happened to Enron and WorldCom. This is one of the famous finance topics that people discuss when during their during their time in studying financial management. So please expect that I'll be one of these days I'll be giving a quiz, or not a quiz, a take-home exam or a written assignment for both Enron and WorldCom. So you might want to read more about that. So that's it for the consequences. So how should employees deal with unethical behavior? So most of the time we're only talking about the small types, sorry for that, small types of unethical behavior. So actually these should be sanctioned well by both management, the human resources, because the more that you do not address these problems, the more that it will grow big. So prevention really is the best way to deal with this type. So you need to know what are the typical unethical behaviors that are conducted in different types of industry if you will be tasked to prevent this, because like what I said, preventing unethical behavior would also help you prevent the company from going down because of this type of practices. Because usually unethical behavior stems from the viewpoint that employees are, what do you call this one? Employees are more on giving weight for their personal gains rather than the gains of the company. So please take note of that. Okay, so the last topic would be the conflicts between managers, stockholders, and bondholders. So this is actually related to business ethics. So conflicts between managers and stockholders. Remember, there are times, like what I said, managers may look into further their personal goals and would compete with the shareholder wealth maximization. They will actually think of themselves first before the company that they're working with. So that's one particular conflict that should be prevented in any type of organization. So in this case, they would be more interested in maximizing their own wealth than the wealth of their stockholders, and therefore they may pay excessive salaries or give themselves more perks and things like that without looking at the bottom line and how it would affect the shareholders or the stakeholders of the company. So actually, stockholders can intervene directly with managers. Okay, so please note that internal conflicts usually would again bring downfall to a company and would also lead to business questions in business ethics, and that would lead to the firm's stock to become undervalued. And when it becomes undervalued, the what we call corporate raiders, those individuals who targets corporation for takeover because it's undervalued, would see it as a bargain and will attempt to capture the firm. So they are like the vultures in the business industry, in any business industry. And after they have been able to set their target on, they will capture that firm for a hostile takeover. So hostile takeover means acquisition of a company over the opposition of its management. It's because they can no longer do something about it because their firm's value already went down, and most likely if there's a hostile takeover, the current management is usually fired from, most of the time, certainly fired from their jobs. So it is very important that managers try to maximize their intrinsic value and then communicate effectively with stockholders to avoid this type of conflicts. There is a proper communication between the two, and managers should prevent their personal agendas in interfering with the wealth maximization of a company. So I think that's it. That's just an introduction of what finance is. So I'll be giving a forum assignment for everyone, so please check your classwork for the link and make sure to answer your forum. Your forum is equivalent to one assignment. The total points of 5 points. So the deadline of that would be January 29. So I'm hoping that you will be able to give me please do not give me just one sentence, and so you give an analysis of the question that I have given in the forum. Okay, so that's 5 points, so the highest is 5/5, that's 100%. So in order for you to get a good grade, you should have a score of 3 and up. If you give me one sentence only, I'll also give you only 1 point. Okay, so thank you for listening, guys, and see you at the forums.